Hey guys, hope you're well. I thought I'd make another video about channels. I was going through my Twitter earlier on, and I did a post on Twitter a couple of days back, and I said, remember the movie Inception about a dream within a dream within a dream within a dream? I said Hurricane is the same, a channel within a channel within a channel within a channel. So that got me thinking, right, let's make a quick video about further explaining how price action works within channels. All right. What the mistake of a lot of people who think they understand technical analysis make, in my opinion, is they only look at the micro movements. So they'll only look at like the hourly chart, the 30-minute chart, the 15, the 10, the 5, the 3, the 2, the 1, and they'll only look at what price is doing in the microcosm. What you have to do, what you have to understand with price action and the markets and the charts is that there is a macro view and there's a super macro view. And we always have to be aware that price is moving within the microcosm, the micro movements, which is like the hourly and downwards, hourly 45, 30, and so forth and so on. Price is moving within channels, spiking, making new channels, creating new areas of resistance and support. Yeah, it's doing all that in the micro movements. But we also, as technical analysis professionals, we have to realize that there's a bigger picture going on. All right. So I just wanted to explain and demonstrate. We're looking at Lloyd's on the 1 hour as an example, yeah, of what's going on from the micro to the macro, because it's our job as technical analysis guys, right? Developing this skill set that we know what's going on from the small, medium to the large because it all interplays with each other, and we need to be aware of these levels because price can reverse at these levels, price can bounce at these levels, and we certainly got to be aware. Like for example, if we want to buy the market and we're aware that price is approaching a key level of resistance on the charts, we might think again about entering in before we see what price does. It's always about managing risk and reducing risk. And the more you reduce risk, your percentage of winners is going to go up. It's as simple as that. Because being good at technical analysis and being proficient at it and developing a skill, right, the byproduct is that you make more money. It's as simple as that. And making money is not just about hitting that buy button, right? Or sell button. It's about not getting in at all sometimes and staying out, being an intelligent investor. And technical analysis is the toolkit that enables us to see and understand market structure. I'll go on further about market structure in some further tutorials, but for now, let's look at Lloyd's on the 1 hour, right? So as we can see, we've got a nice little channel developing with Lloyd's on the 1 hour, all right? So you can see that price gapped from 28.340, gap down, and then started consolidating along, and then price came down, then back up, and then consolidated, then came back down, and now it's come back up. So we draw touch dominant trend lines because we know how to draw channels now. So the more it's got the most touches, I think, along the top. Or let's have a quick look. We've got one. It might be the bottom. It doesn't really matter. We've got one, two, three touches. We've got one. Yeah, it's touch dominant at the bottom. I do apologise. So we've already drawn the channel. So the bottom trend line is dominant, and so we cloned it, and then we put it to the close of the top. So we put it to the close of this red candle here. All right. We'll just adjust it slightly just to make it match a little bit more. So there you go. So there we've got the 1 hour, all right. But there's bigger action going on around it that we need to know about with this stock. We have to know about it. So what we'll do, let's zoom out to the 4 hour, all right, and let's get a bigger picture of what's going on. So let's just adjust this. Sometimes you just need to readjust them slightly off the 4 hour, but that's no problem. All right, so we can see that this is the channel that's migrated from the 1 hour. But can you see what we've got going on here, guys? We've got a channel, a bigger downtrend channel, right, on the 4 hour that was drawn. It's touch dominant to the upside, all right, so you can see how it's been drawn, all right. So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 touches to this medium channel on the 4 hour. So what we did, we drew the trend line, we cloned it, and then we put the underside trend line and we put it to the claws of the candles underneath here. So there you go. So we've got a channel here, and we've got a downtrend here. So what do we not do, guys, in a downtrend? Right? What do we not do? We don't buy the market. So to me, there is no buys here whatsoever. If you were to buy this action here, guys, you're going against the trend. Now, the market dealers are very, very, very clever people. All right. They're very clever people and they know how to trick and trap. Look at this candle that they've created here, right? Look at this enticing candle, right? This beautiful candle, right? If this candle was in a key location in an uptrend in a channel, that'd be you'd buy that candle all day long because this candle originally, guys, yeah, was a solid red candle. This is how these tail boys are made. That's how they're created. This was all selling. But then buyers came back in, created this wick and this little head and turned it all green. So this is a very bullish candle. But in the context of where it's at, in the location, it's a trap, in my opinion. It is an absolute trap. I mean, we've got a strong downtrend here. All the EMAs are above price action. And not only that, it gapped to the low. And for it to gap, there's got to be a lot of very, very rapid selling. Boom, it gapped down there, right? So we can see what's actually going on. Now, you get a lot of rookie traders buying this. Oh, look at Lloyd's, it's bouncing. They'll buy it. They'll get trapped. There's a high chance they'll get trapped. So we've got a channel here. When you look at this channel in isolation on the hourly chart, guys, right? And, or even on the 35-minute, let's just zoom down even more. Because this is the problem with what a lot of investors do, right? What they do is they're looking at it in terms of day trading. Now, I day traded for years, right? I day traded the American CMEs, Chicago Mercantile Exchange, right? American futures market. I got thousands of hours of day trading, so I know a thing or two about day trading, right? And if you were looking at this channel from the perspective of a day trader, yeah, you know what? You might take some opportunities. You might do because it's a lovely little trend. But what we do, guys, we swing trade. Look at it on the 30-minute, very enticing. But when we are swing traders, right, what we're looking at, guys, is price action moving over larger time periods. And we have to be so aware of that. All right. So we would not buy this market. Why? Because it's a downtrend. The medium action is a downtrend, all right? You will be risking a pullback. And when we swim against the tide or trade against the trend, that's when the issues can really, really occur and you can get trapped. Lloyds is so good at trapping people. Uh, right, so let's expand out even further, right? Let's go on the daily. Boom. So look at that, guys. So now what we've done, we're now looking at a bigger macro view. Let's just zoom out again, right? So look at this. Wow. So now, guys, what we've got a channel within a channel within a bigger channel. All right. So the macro view is a downtrend. We've got an inverted head and shoulders here. The left arm started forming really. You could really call this or this the left arm. this area of resistance started forming like May 2017, guys. See, this is how, as TA guys, we can look into the future and see what might be happening. I mean, when this formed here, like early May 2017, these heads here, price could not get past it. And then jump forward to when the right shoulder formed, right? Early December 2019. I mean, look at that. Boom. Look at the drop. Look at the drop, guys. But the market knew what it was going to do. I mean, this actual resistance, really, guys, emanated from like early March 2016, if truth be told. So you could have put the head here, here, or here, and price could not get past it. It's inverted head and shoulders drop. So then what we can do as well, we can take this out even further, guys. All right, now we can go to super macro view of Lloyd's. So this is the weekly chart. Now I don't usually use the weekly chart, but every now and again it's a really, really good idea to do so because you can see the super macro view. The super macro view with Lloyd's, it's been a downtrend since day one. Since day one, this stock has been creating a downtrend all the way when it floated in 1996, and then it came up to its all-time high, touched 545p, and it's been pretty much downhill ever since then. When you look at the super macro, right, this stock has been in a consolidation phase since early November 2018, right? Unbelievable. And it's been in a consolidation between 16 and 89p. And I said on Twitter earlier on this evening, I said Lloyd's is the most boring stock I've ever seen in my entire life because the super macro range from '08, as you can see, the super macro market state, sorry, from '08 is a range in market state. Look at that. Just boring. Absolutely boring. Yeah, can you trade it? Yeah, you can trade it. If you want to, of course, But we have to understand market structure. We have to understand what's going on. I see that many TA guys and stuff like that on Twitter and all the rest of it are going on about Lloyd's this, Lloyd's that. But look, he that understands the past can predict the future, all right? And that goes to any avenue in life. You look at uh, behavior, and then you can correlate it, and you can do an analysis, and then you can project to see future behavior through past behavior, if you know what I'm trying to say, right? So we look at Lloyd's, and what has it been doing? It's just been consolidating. Head and shoulders drop, sell off, gaps to the downside. Now, is there a possibility that Lloyd's will want to touch the bottom of this consolidation? Absolutely. Absolutely. Because it did on the 26th of January, 19th of January 2009, it touched its all-time low. So is there a chance that it'll seek those lows? Absolutely, it could. So do we buy this current market? All being said, and knowing that the uh, micro and medium term are downtrends, no, we don't. No, we don't. Not financial advice, but no, we don't. According to my technical analysis, all right, according to what the charts are telling us. So, there's thousands of stocks, guys, that are trending up. So surely as technical analysis individuals and savvy traders learning a real world skill set and money making skill set, surely the whole point is to put the odds in our favor, right? So why swim against the current of the dealers when we don't have to? We want to swim with the flow of the market. We need to go with the big boys. This is what this is all about at the end of the day, all right? So we've got a channel within a channel within a market state. All right, within a market state within the super macro downtrend market state. So that's where Lloyd's is. Super macro downtrend, right? Macro range, medium downtrend, micro and we'll just zoom down, micro downtrend. Do you see how it all works now? The markets are puzzles, right? The puzzles. They're enigmas wrapped in mysteries, right? They are a puzzle. So to someone that doesn't know what's going on, it's impossible for them to see. They don't have the decode script programmed into their brains to see what's really going on. This is what we are learning together. It's a decode script, right? So it's an algorithm and it's an antidote to the movements of the markets, right? It's like it's if it's the Matrix and you're Neo, right? I'm giving you a download of how to read the markets, right? It just takes a bit longer because in the Matrix you could get all the information in about a minute, but this just takes a bit longer. But so if you're Neo, right, I'm giving you the download to show you what's really going on. All right. So these are very, very important levels. We can see we've got a level here that price might want to the low 16s. That price might want to break through to. I mean, there's an absolute chance. It makes me laugh when you get these forum individuals saying price will never do that. It's all to do with RNS reports, media reports, and all the rest of it. Bullshit it is, right? Let me tell you something, yeah? The market is an entity to itself. It is not linked to any economy. So get that out of your head. That's a fallacy that has been created to blind the masses. Trust me on that. And I can prove it with market moves. The market does what the market does. All right. And every candle that you see within this structure, right, is created by the dealers, the market makers, the big boys. The matrix antidote, the decode that I offer through my technical analysis gives us the potential heads up to see what could happen and where price action is really going. You see, look at this 4 hour chart, right? Yeah, let's draw this trend line here, right? This is a possibility. This is a possibility, right? So we draw this trend line, we're getting quite a few touches here. We clone this and we move it to the upside. Now, there is a possibility that price might already be developing this channel. All right, so we keep an eye on it. We price perimeter it to the up and to the down, and we track it in real time. We don't jump in like idiots because obviously, remember from the previous video, guys, yeah, our capital, our money, they're our soldiers, right, and they're on the front lines. So we need to look after our soldiers and we need to look after our armies because without our soldiers, guys, we can't fight the good fight. We don't have billions and millions of pounds spare like the dealers. So we have to be very, very resourceful. This is also an idea of what Lloyd's could be doing. I just spotted it literally while I was chatting to you guys. All right, so we'll save that as a possibility. We've put a triangle in. I'm going to do a video soon about asymmetrical descending wedge formations, symmetrical ascending wedge formations, triangles, wedges, and all the rest of it. So we'll do a video about that soon. But I wanted to show you a little bit more information about the micro to the medium to the macro to the super macro, how they're all interwoven. Now we need to know about these areas. All right, guys. I hope you found this video interesting. I love this stuff. I have an absolute passion for it. It inspires me to learn more and more every day because at the end of the day, guys, if we can get over the elites, right, and we can suss out the elites, yeah, that doesn't, that makes us just as clever, if not cleverer than them. All right. Learning this stuff will literally give you an advantage of 95% of retail investors out there in the world. And that's a conservative number. So carry on studying. We're going to build Swayze's Discord into a force to be reckoned with. We're at the genesis, we're at the formation, you are the foundational members, and I sincerely appreciate you for giving my support because I was just some random dude that landed on Twitter, and you guys are giving me your trust. I'm going to carry on growing, and I'm going to carry on making these videos. I want to inspire. I want to you because you inspire me, and I want to carry on growing this quality content. All right. So God bless, guys, as always. Have a great day, whatever time, or evening, whatever time of day it is, and I'll catch you up with you all very, very soon.